Hello, and welcome to another episode of My Take. It is Friday morning, May 23, 2025, and I am Sunil Thakker of Sunny Talks Money. Today, we dive into a market narrative that's as complex as it is compelling. Investors are threading a needle between stimulus driven optimism and mounting debt concerns, an environment where traditional assets are wobbly and Bitcoin is breaking new records. Let's unpack the key themes. First, the big headline: President Trump's sweeping tax and spending bill has passed the House by a single vote. It is a legislative behemoth, offering tax breaks on car loans and tips, pouring more money into defense and border enforcement, and ending several green energy subsidies. Before revisions, the bill was projected to inflate the budget deficit by $2.7 trillion over the next decade. Now, that figure is closer to $3.8 trillion, pushing total US debt to a staggering $36.2 trillion. And investors? They are not thrilled. Bond markets reacted quickly. Treasury yields, especially at the long end, spiked earlier this week. The 30-year yield briefly topped 5.1%, a level we haven't seen since the financial crisis. But by Thursday, we saw a bit of relief. The 30-year yield settled around 5.05%, and the 10-year dropped back to 4.55%. Still, a poorly received $16 billion auction of 20-year bonds is raising red flags. The market is now watching for a circuit breaker, possibly weak labor data that could prompt a Fed policy shift. Over in equities, it was a mixed day. The Dow was flat, the S&P 500 slipped less than 0.1%, and the Nasdaq gained 0.3%, driven by strength in tech. Nvidia rose 1%, Alphabet climbed over 1.4%, but solar stocks took a hit. First Solar was down 4.3% as the bill scales back clean energy support. As Andrew Sliman from Morgan Stanley put it, the market seems tired. High risk stocks have led the rally that's running out of steam. Housing data confirmed the slowdown. Existing home sales unexpectedly dropped, marking the slowest April since 2009. Meanwhile, jobless claims are ticking up. Continuing claims hit their highest since November 2021, a potential early sign of labor market softening. However, there's some light. The US PMI rebounded to 52.1 in May, suggesting activity in both services and manufacturing is expanding again. Globally, the picture isn't much bright. The Eurozone dipped back into contraction. UK government borrowing surged, and German bond yields rose as debt anxieties spread. The euro weakened while the US dollar bounced back after 3 days of declines. Now to the breakout star, Bitcoin. Bitcoin crossed a new record over $111,000 as investors look for alternatives to traditional financial systems. The Senate's progress on stablecoin regulation gave crypto a boost. And yes, President Trump is scheduled to attend a Trump meme coin gala dinner, which only adds to the buzz. Commodities soften. Oil slipped as OPEC considers a production hike. Brent crude settled at $64.44 and gold dropped to $3,295 an ounce as investors rotated into dollars and crypto. Bottom line, markets are caught in a tug of war between fiscal stimulus and fiscal strain. Stocks are holding but wobbling. Bonds are volatile, and crypto is climbing fast. In today's environment, traditional signals are blurring, and investors are left navigating a fog of debt, policy, and disruption. And that's my take for today. Please do like, subscribe, and share this video as much as possible. I will see you now on Tuesday morning, as May 26th, Monday, is the markets will be closed for Memorial Day. Thanks for watching and stay sharp.